Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 3rd, 2021. I want to cover MeMe stocks. Here are a few examples of MeMe stocks. We got AMC, GameStop, BlackBerry, Express, Nokia, Bed Bath and Beyond, and many more. Typically, these stocks are mentioned within Wall Street Bets Reddit forum. And what typically happens is folks who really buy this in the beginning, they end up making a lot of money. Later on, people look at this and keep buying, thinking it will go up. It will go up for a while, but then it will come crashing down. So I think the key thing is to really look at these stocks and see if it makes sense to buy at this point, or should we bet against these stocks. We will look at some of those techniques as we go through a few stocks here and see how to play this MeMe stock game. So with that, let's jump in here. Here are a few examples of MeMe stocks. So the way I kind of got these MeMe stocks, and also here are some stocks with high short ratio. So as you can see here at the top, we got STEM. So STEM is a $31 stock. And the performance, the way I organized this is really by 1 month, actually 3 month performance. If you see here, STEM has got the maximum, not STEM, I think in this case AMC has got maximum performance of 475% in 3 months. And as you look at below, these are in the descending order. One at the top, which is AMC, has got highest performance. So as we see here, the one thing I always look at is really I will look at how the stock is doing. For example, if you take STEM, the first row here, $31 stock, it's about $3 billion market cap. Right now, this stock seems to be a little bit newer type company. It's not there for a long time. But if you look at 1 day, 1 week, and 2 week, it's been doing a lot. So I would take a pass on this at this point and look for a little bit pullback if you want to invest in this little more. And I also look at RSI, relative strength index. If the RSI is above say 65 or 70, I will take a pass at the time. They will always come back. We don't need to chase stocks like this. And as you scan through this AMC here, $51 stock, and as you can see here, they have not done too much revenue at all. Everywhere, 5 year, 1 year, quarter over quarter, all the revenues are negative. But this is a reopening play. As more and more people take COVID shots, they will be a little more enthusiastic to go to these movie theaters. That's why the stock is going up in addition to the MeMe stock mania. So with that, it's got a good gross margin, but net margin is negative. RSI is super high, 89.1. And as you can see here, institutions are owning a little bit, not too much. Very high short ratio, 21%. As you can see here, its price to sales ratio is 21, a little bit high, but manageable. As you scan through this here, they have done 818% in 1 year and 1088% in 6 months. As you go all the way down to 1 month, 2 week, 1 week, they have done nicely. But now I think they've issued some more stocks. That's why stock is coming tumbling down at this point. So what I would do is really I would wait for this to settle down a little more and look for a small uptick in the chart or even in a 1 day chart. Then I would buy a little bit. I will not buy hundreds or thousands. I will sample. To begin with, I might buy AMC on a small uptick, or even on a down day, 2 or 3 consecutive down days. I will buy maybe 5 or 10. Then I will wait a little bit and then I will add more. So that's how I typically play these these stocks like AMC, which are coming crashing down. And sometimes what I'll do is on an up day, I might buy some put options. For example, if AMC is super high, I look at also I look at IV percentile. If I feel IV percentile is a little bit low, say below 50, I might buy some AMC put option, so that way I can take advantage of stock going down. Those are two ways I do. Sometimes, if I already have some call options, or if I already have a AMC stock in one account, I might short it in a different account. So that way, I have a counterbalancing. I can liquidate positions accordingly. Either on the long side or short side. Then we got PLBY here. PLBY, as you can see here, stock is about $44, $1.4 billion market cap. And as you can see here, they got RSI 48, which means it's kind of in an over sold territory, which is okay to buy at this time. And they got high ownership from an institution perspective. And one day, 1 week, they have not done much. So there is some uptick at this point. I will not jump in at this time. I will wait for a little bit down day. Given the RSI is 48, it's okay to buy the stock a little bit, or you want to buy a call option 70 delta or so. As you look at LEDs here, in this year, it's got a high RSI 73, and there is no sales. As you can see here, sales is all 5-year, 1 year, quarter over quarter is all negative. It's a $5 million sales, very low sales number. So as you look at the performance here, this stock has bid up so much, 667% in 5 years, 1 year 407%, and all the way to 1 day 23%. I would wait for a little bit pullback here. I would not buy right away, because with the RSI being a little bit high, I want to look for an entry position where RSI is a little bit lower. If RSI goes even higher, say around 89 or 80, like AMC, I might buy some put option if the implied IV rank is a little bit low. Or I might even short this little bit, not not too much quantity. I might short this little bit in a different account, and hold some call options also in the meantime. So that way, if the stock goes up, I do have call options at a lower price, delta 70 or so. So that way I don't burn myself severely. Then we got GameStop here. What can I say about GameStop? It's a one of the favorite MeMe stock here. As you see here, they got debt to equity ratio is high. Same is the story with the LEDs. That means these guys carry a lot of debt. You got to be a little bit careful there. And they got okay gross margin in case of GameStop here, but RSI is 68, a little bit high for me at this point. And as you scan through this, it's down today 9%, but generally it's up for 1 week, 2 week, 1 month. I would wait a little bit for a little more pullback. If there's a continuous like 2-3 down day, I might buy a little bit, and then go from there. Express, as you can see here, one thing jumps out at me is really very heavy debt to equity ratio. These guys have taken so much debt. It's not even funny at this point. So stocks like this, I would as you can see here, today is a 20% down day. And it's been doing nicely for 1 week, 2 week, and whatnot. So given it's a $5 stock and the RSI is around 64, I would wait for the RSI to come back around 50 or so, and then I would buy some and hold it for a while. Then we got BlackBerry here, same story, $15 stock, nice gross margin. I like this gross margin, and the sales acceleration is all negative. And as you can see here, they've done nicely for 1 day, 1 week, 2 weeks. So I would not touch at this point. RSI being 77, I might buy some put option depending on the implied volatility, and take it from there. So that's the general methodology I use. I look at RSI and see how the stock is doing in 1 day, 1 week, 2 week, and then take some action. If I see RSI is high like AMC, I might buy some put option, or I might even short if I already have long position or a call option that I have already purchased. So that's the general methodology. With that, what I will do now is I got this page 1 here. You can look at this. I also highlighted some things that I like, for example, high gross margin and some rows where there is a positive sales growth. When there is a positive sales growth, I'm not too hesitant to buy on a dip. So I would buy it, and I'm not afraid to hold it for a long time. But when there is no sales growth, that's where I kind of use that as a trading opportunity. I will go in and out. Typically what I do is I'm not a fan of buying one stock, thousands of them. Instead, I might sample. I might buy say 100 stocks of AMC, maybe 50 stocks of BlackBerry, or maybe 100 stocks of BGS. Because commission is all free, you don't need to pay for commission. You don't need to buy just one stock, like thousands of it. You could sample and buy multiple stock depending on a given day. If a stock is crashing down, you might buy the stock maybe 150, whatever it is. If it falls again next day, you add some more. That's why you accumulate a good position, and as it goes up also use same methodology. You can take maybe 25 off, 25 more off. As an example, I bought AMC a while ago, and as it's going up, I've been taking a little bit off at a time, maybe 10 stocks today, 20 stocks tomorrow. So that way I slowly get out of my position, but not rapidly, because AMC has been going up off late. You don't want to be completely out of your position. So that's a strategy where you can leg in slowly on a down day, add more if it's a further down day, and leg out as it comes up. So that way, that's a very good strategy. It works out very well. So with that, what we'll do now is we'll look at a couple of stocks here and see what the best way to look at these stocks. This is a chart from Thinkorswim, as you can see here, and we got first MeMe stock here, which is AMC. As we look at AMC here, one thing to look at is really RSI. RSI spiked up here as stock went up. This is as it spikes up here, at least I will not be buying at this time. I might do some shorting, or I might even buy some put option at this time. But as RSI comes down, this is where I will be accumulating a little bit, so that way I have some position with me. Accumulate slowly, maybe 20 stocks or 50 stocks at a time. And then as RSI tries to go up like this, you slowly keep selling 20, 30, 40, so that way you kind of slowly get out of your position. And if RSI goes up like this, that's when you kind of look at some of the shorting strategies. You might already have the stock in one account. You might short in a different account as an example, or you might even buy put options at this point. So that way you already have stock. Then as it goes up, you might sell some of these stocks, and you might buy some put options. That way, if it goes further down, you can take advantage of that too. And as you can see here, when the implied vol is high like this, I will not be a buyer of put option, because you'll get burned out. So typically the time to buy put option is when implied vol is low. But if implied vol is high, it's not a great time. You can be even if you already have the stock, you can think through. Maybe you can buy some, you can sell some put options at a lower price, so that way if it comes crashing down, because it's a low dollar stock here, I think it's around $72. You could sell some put options, because implied vol is high here. It's about 48 or so. You will get some good premium. That's another way to really take advantage. You have the stock, you can sell some put options slowly. Sell one lot, two lot, don't need to sell too much. So that way you can take advantage of that way too. Next, what I will do is, let's look at one more chart here. Here we got Rite Aid here. Rite Aid, I think it's a little bit interesting chart. As you look at the chart, you get an idea about what stock might do. As an example, Rite Aid went up, came down, then went up again, up, down, up, down. This is one of those stocks where it gives you a lot of trading opportunities. So here the strategy I would use is really I would look at RSI. RSI is around 54. For every stock, RSI is behaves a little differently. If you look at Rite Aid, they went up all the way here to around 70 or so, came down, went back to 70. Now they're down. I'm sure they'll slowly make their way back to 70. So this is a good position. When RSI is low, you can buy some stock, keep accumulating. As the RSI goes up, I'm sure this will have some more updates. As you can see the chart, you can slowly sell or deleverage at that point. So RSI is one of the very good indication. I think you can use it for your advantage. One more thing you can do is really look at the volume average. So as you can see here, volume average is trying to go up slowly. That tells you stock is gaining momentum. If the candle is green going up, and you also see on the balance volume going up and check-in money flow going up, that tells you what, there is some conviction in this up move, and you can you can hold on to your stock at the time. And even if you want to sell, sell slowly. You don't need to rush and exit out of the entire position. Next, we'll look at one or two more. Next is BlackBerry, another favorite MeMe stock here. As you can see here, this also, pretty much wild trader where it goes up, comes down, goes up. As you can see here, same story here. RSI went up, came down, went up again, came down, went up, came down. Now it's again oversold territory, overbought territory. So I would, maybe I would not buy stock at this time. I will wait for this RSI to come down. Just see here. I mean, as you see here, somewhere here RSI was around 50. This is a good time to buy. This BlackBerry will come down again. It will come to 50 again. So at that time you can buy some more and keep it for a long time. So right now BlackBerry is what, about $28. It will easily come down to around say 12, 13, $15. That's when you buy some and hold it for a while. And for BlackBerry, as you can see here, DMI is positive at this time. I would not trust the DMI at this time because stock got pumped up. That's why DMI went up. And as you can see here, implied vol is up. I would not be buying options at this time. I might sell some put options if I are to take advantage at a lower price. So that way BlackBerry comes to say 15. I might buy BlackBerry at 15, so I could sell some put options at 15 strike price, maybe say 45 days out. And check-in money flow is kind of, I think it's going down at this point. So there may not be too much juice left at this time. It might come down a little more. You can take advantage of that and buy, and buy some stock, or even buy some, sell some put options. So that way you can buy stock later. With that, thank you very much. Happy investing and trading, and be very careful with these MeMe stocks. They come up and down pretty, drastically. So time to buy them is at a low price when the RSI is lower. So with that, thank you very much. Happy investing and trading.